This episode is brought to you by Communications Training for Coffee Teams, a new Map It Forward workshop tailored to get your team communicating more confidently to improve general mental health as well as business profitability. Click the link in the show notes for further details. Welcome to the Daily Coffee Pro by Map It Forward, friends. I'm your host, Lee Safar, and I'm joined for episode 2 of our 5-part series with Judy Ganes. Judy, we are today talking about availability of coffee in 2023. Tell us everything.
Okay, so in 15 minutes or less, we can cover it all. No problem. The situation is that I want to talk about the availability of stocks.
Mm-hmm.
And in our last podcast, I alluded to that there's some similarities to 1997.
Mm-hmm.
So I want to sort of do that throwback in time as to what happened and then where are we positioned right now.
Mm-hmm.
So there's coffee that's held in producer stockpiles at farms and cooperative warehouses. And that stock isn't as visible as stock that's sitting in the United States or in Europe. Now, coffee that is deliverable against the New York Arabica contract has to be graded and certified. It's
Mm-hmm.
not the same as a certification program. So don't confuse it with Rainforest Alliance or UTZ or Fair Trade. It's really just establishing that it meets the base grade specifications for delivery against the New York contract. And those warehouses that are acceptable for delivery are in several ports in the US and also in Europe. That availability of certified coffee for delivery has an oversized impact on prices because you have contracts and the seller of a contract is obligated to the buyer if they're demanding delivery to make delivery of that coffee.
Mm-hmm.
If the coffee doesn't exist in certified stock, well, they've got to get the coffee. And if they can't, then they've got to liquidate their position by covering the short, buying long, and that can drive up prices. And so the market becomes very sensitive to the direction of those stock levels. And if stocks are 3 million and they go down to 2 million, no one's paying attention. But if stocks are 900,000 bags and dropping to 200,000, well, that sends a big warning message, an alarm that, wow, someone could potentially squeeze the market and cause prices to jump sharply higher. And we had a couple of instances of this past year,
Mm-hmm.
and it's still on the radar screen because stocks started to come back down again. In the past 10 days or so, we've had close to 100,000 bags of coffee taken from exchange warehouses.
Why? Were they not certifiable?
Why? Well, the reason is this. You have coffee futures price, but then
Mm-hmm.
you also have cash prices
Mm-hmm.
that are trading at a positive basis or positive differential. So in other markets, the difference between cash less futures is called the basis.
Mm-hmm.
And in coffee, it's called the differential.
Okay.
And when you have positive differentials, so the cash price is above the futures price, why would you possibly want to deliver it against the futures contract?
Mm-hmm.
Because you can make more money selling it in the open market. And we've had positive differentials for Colombian coffee and Honduran coffee and Guatemalan coffee and Brazilian coffee even. So all the growths that are deliverable against the New York contract are selling at much more attractive or lucrative prices in the cash market. So you don't have fresh crop coffee coming to the board.
Mm.
And that's why the stocks have been able to come down, because for a buyer, they're saying, okay, what's the cheapest commercially available coffee? Well, I could buy Hondurans for 34 over, or I could take, Colombians for 60 some odd over, or Brazilians for 25, 30 over, or, oh, look, here's a certified stock that's been sitting there and has accumulated some age-related discounts, some penalties, and it's a bargain. So what if it's not the best coffee? We're just going to blend it anyway. And so it becomes the bargain. And that's why it disappears. And so when you have firm differentials, then there's high demand for the certified stocks. When differentials are weak, then you have more coffee coming to the board. So you have this dynamic where the cash market prices have been above the futures price, reflecting the tighter supply and the higher costs. And some of that is related to quality. Some of it is related to location. You had Colombia have production problems for the past year because of La Nina linked heavy rains, and it just everything fed onto each other. And so how producers get rewarded is having a positive differential. And when that happens, certified stocks disappear.
Drop.
That's right. And you also had certified stocks I know you were going to say something. You also had certified stocks being drawn down during the past year or year and a half because freight rates were so high. And so roasters were saying, look, we're having delays and we're going to have to utilize the stock. And it's here, it's available, it's sitting in European warehouses. And we're going to utilize this instead of paying high freight rates. And that helped to pull the stocks down also.
Between what we spoke about in our last conversation about pricing and what we're talking about with regards to the availability, I have to ask, because it all does sound that we need to be paying significant attention to this. What does this mean for the price of coffee over the next 12 months?
Okay, so the coffee market is exceedingly efficient, and that's part of the rules of engagement, and because the trade is very seasoned at dealing with this and understanding it. So what happens is the spread between one contract month to the next, sometimes the market inverts where the nearer contracts are trading at a premium to the more discounted months to reflect this tight supply situation. And so when you don't have that cost to carry built into the market, then the trade will tend to bring coffee to the board, and that will realign the market and put it back into carry. And so we had that situation back in October where kind of the air was, sucked out of the market and prices came down. And then the number of bags, there was over 1 million bags of coffee that were graded, yet only 60%, actually just shy of 60%, were of decent enough quality to pass.
What happens with the other 40%?
It didn't.
It gets rejected.
It gets rejected.
So it has to be sold on the cash market?
Or it gets put back into warehouse in Antwerp. So, so what happens, when you have high cash differentials, you're not going to see fresh crop coffee coming to the board. Like absolutely no way is that going to happen. But there's millions and millions of bags sitting in warehouse especially in Antwerp, okay, that could potentially be deliverable grade coffee. Some of it would be Robusta, some of it is Brazilian naturals, but there's 3 or 4 million bags of washed Arabica coffee, which could potentially be used to meet delivery obligations. Now, some of that coffee is not going to pass. We saw 60% only pass. Why? Because the cup quality didn't meet the requirements.
Mm-hmm.
So it can't show that it's Brazilian natural. So it can't be natural coffee. It has to be washed Arabica. So it can't have a hint of that in the cup, and it can't have any hint of being aged. Also, the color of the coffee was faded, which shows also that it was older coffee that was just kind of sitting around in warehouse for a while. Now, the trade doesn't necessarily have to deliver the coffee if it's the exchange quality. Maybe they have expected buyers for that coffee, and they're not going to put it to delivery, because when you deliver the coffee to the market and to the exchange warehouses, it accrues age-related penalties. And the longer it sits, the greater the penalty. And so why not keep it out of exchange-related warehouses as long as possible to not accrue the penalties?
Except if it's in the warehouses, isn't it open to be sold as fresh stock?
Sure. I mean, absolutely. Why not? I mean, you could sell whatever coffee, a trade could sell the coffee.
Right.
They don't have to deliver it. Sometimes banks require for inventory financing as collateral that they want the coffee certified.
Right.
But not as much in recent years as in the past. But that's another reason why sometimes there might be coffee that's put up for grading and delivered. But in the case of what's been happening in recent months, I don't think that was the reason.
Right.
It was really to, correct for some, the difficulties that the trade has when you have the market not in carry and instead being inverted with the nearby prices higher. And as the market goes up, then they also have margin calls. And so there's all sorts of reasons why the coffee market will adjust and become very efficient in doing so. And, drawing out the supply is necessary.
I have an uncomfortable question that I get asked by
Sure.
producers a lot. Even though the market is efficient, is it fair?
Well, I actually think that because it is efficient, it's fair. Where people sort of get hung up on this is that they think sort of the tail wags the dog, and that
Right.
okay, and that the market price is establishing their prices, and why should we be beholden to
Correct.
the
This is what
C
producers
contract?
say all the
And
time.
that's always the argument.
Yeah.
And when I hear these arguments, I tend to think, okay, someone needs to take one of my courses.
Okay.
Okay, to understand the principles of supply and demand and economics and the realities of why it's so important to have a regulated futures market and not just abandon that and have cash prices. Part of that is when you have a regulated market, then you have a way of offsetting counterparty risk. So if you just had forward contracts, there could be defaults galore.
Yeah.
You don't have that in the futures contract. The other thing is that when you have a standardized contract, then the trade can hedge and manage their price risk to be able to do the volumes that are needed to have the world coffee trade flow smoothly.
Go on. And if they
couldn't manage that risk, then they're not going to pay the prices.
Right. And
So that's one thing. Okay. The other thing is that the futures market is a way of offsetting and transferring that risk from commercial players to speculators who are in the market just for profit. But there's another key component to the market, and that is that it's for price discovery. And I think that people underestimate the market's ability to do that effectively and efficiently. And when it's talking about price discovery, it's taking every possible nuance of supply and demand, of weather factors, of changes in interest rates and currencies, and factors that maybe won't impact a producer in Indonesia as directly as it would in Brazil, but it's taking production into consideration worldwide, even though it's just a washed Arabica contract. And it's doing so, it's like a sponge with an immediate response in absorbing this information and relaying it back in price. And if there are distortions, then that's reflected in the differentials, the difference between cash and futures price. So if the market is under pressure because there's concern about a recession, high interest rates, or because the dollar is on a tear rallying up, okay, then the futures market might be depressed, but the market is then going to see differentials strengthen. And people just look at the C price and they forget about differentials,
right,
and where the cash market is, and it has to be looked at together.
At the end of this series, actually in the show notes, folks, go and take a look at links to where you can see Judy's content. Subscribe to her newsletter and pay to get the paid newsletter, because the information that you get is out of this world. Also, follow her on LinkedIn. I learn so much from Judy's LinkedIn. I really do. So we're going to head to the next episode. And in the next episode, we're going to talk about the global economy and coffee, because I suspect that we have some interesting things in our future. And these first two episodes of this series have definitely laid the groundwork for what's coming in the next episode. Judy, you're a master at this, and I learned so much. Thank you. Peace, love, and peanut butter, everybody. Have an amazing rest of your day. Thanks for tuning in, friends. There are 2 ways you can support this podcast. Firstly, become a paid member of our YouTube channel. Secondly, you can join our Patreon for as little as $3 a month. Don't forget to subscribe and like this video before you leave, and check the show notes for more information. Now, this is what you should check out next.